Hello. So as we can see, the markets have been in a quite a paralyzed mode for this week. On one hand, as we are stepping into the summer season, and from the other hand, as we have rising geopolitical escalations in the Middle East, which has quite impacted the overall investor appetite into the region. And also, we had a notable drop with the UAE MSCI index, which with over 8.5% for this month, reflecting that dampened sentiment and potentially also affecting the global sentiment of global indices. And as we can see, with respect to the US indices, NASDAQ has pulled back from its record near its record highs, the 22,000 mark, trading now near the 21,400 support. Clean hold below that can possibly extend further pullbacks towards the neckline of that respective double top formation, which is near the 21,000 or 20,600. In extreme cases, from the upside, if the tech rally is going to continue, possibly exceeding the record highs, which is near the 22,200 mark. Another key level I'm eyeing for the Nasdaq here is the 23,700. Now, looking at the S&P 500 and the Dow, they are still clinging on to their respective necklines over here. If they still hold above these necklines, then they have a chance for the second half of 2025 to climb back towards their record highs. If not, if they drop below those necklines, so key level I'm eyeing for the S&P 500 here is near the 5,800 to the 5,700 zone. A clean hold below that can possibly extend further a bearish forecast for 2025. If not, if we're going to have a resilient price action and hold above that neckline, back above the 6,000 mark, then we might have the possibility for renewed bullish momentum back towards record highs for the second half of 2025. Yeah, so with respect to the gold chart, it has quite surprised investors as it is still in a pullback mode despite the rising geopolitical tensions in the region. And with that, also gold is still holding at notable technical levels from a monthly time frame perspective at the trend line connecting the consecutive peaks of 2016 and 2020, which is at the 3,500 resistance, also in line with overbought monthly RSI indicator. So with that, we can have a possibility for a pullback for gold. If you do have a possible renewed haven appetite into the market and a breakout above the 3,500 mark, then we might see gold break out towards 3,700 and 4,000 in line with that overall cup and the handle pattern formation. If not, if we're going to proceed with a pullback on the horizon, key levels I'm eyeing here, the 3,100 and 2,800 from a long-term perspective for possible buy the dip opportunities for gold alongside its primary uptrend and possibly towards that 4,000 mark. If not, if we're going to have a clean dip below 2,800, then we might have an overall deeper pullback for gold for the second half of 2025.